Are you a small business owner serving your local community? Are you struggling to figure out how to take your business to the next level? Well, if you want to learn how to grow your customers and more importantly, grow your profits and understand those business numbers, well, you've come to the right place, because each episode, we're going to take a deeper dive into your business and all the parts and components that are going to help take you to the next level. So if you're a badass or a badass in the making, let's get this party started. Hey, badass business owners, welcome back to the show. It is Thursday, and that means we're going to talk about something to do with numbers, because that's what we do every Thursday on these episodes. And I want to talk about taxes. I hate them. I'm sure you hate them. I'm sure you hate giving up your money to the government. I'm sure you hate the fact that when you take in $1,000 that somebody wants a piece of that. And what's interesting is when we are regular working for someone else, we don't like our taxes, but we don't fret over them because somebody else takes all of that money out of our paychecks. Did you know that the number one thing that gets small business owners in trouble are their taxes? Because when you own a small business, you are your own tax man. You are the one that is supposed to take the money out of your income with the money coming in, and you are to pay the tax man, and you're paying the entire thing. You know, when you were an hourly employee or even salaried, when you worked for someone else, it's always about how much money you're going to get back, right? People are like, oh, I'm getting $1,000 refund. I'm getting a $2,000 refund. You know what? Most small business owners, it's not a refund. You have to give them money. Sometimes it's thousands of dollars and sometimes it's thousands of dollars, depending upon how successful of a year we've had. But part of the reason that I want to talk about this is because, like I said, it's the number one reason that causes a lot of small business owners to get in trouble. And it's one of the top reasons why people do not stay in business, because they get themselves into such a financial bind. For example, let's just say it's their first year out the chute and they have a banner year. They do $30,000 in sales and they think, oh my God, I was rocking it this year. I made $30,000 in sales. Yeah, until all of a sudden they realize they go to do their taxes, and especially because it was a side gig, that it just bumped their tax bracket up and they need to come up with several $1,000s to pay somebody now. So it really can get people into a lot of trouble. And it's important that we have a conversation about taxes. You need to make sure that you are setting aside money every time you get paid. Now, you're supposed to pay these quarterly taxes, right? You've probably heard about that every quarter you're supposed to pay the government the taxes on the amount of money that you made. Now, for some of you, you're like, I have no idea what that number should even be, which is one of the reasons why we encourage people to talk to tax professionals. Now, before I go on, I also am going to encourage you to talk to a tax professional. I am not a tax professional, but what I'm going to do is give you some common sense that you need to use and then fine tune it with a tax professional. All right. So if you know that you fall into tax brackets, so for example, as the everyday person, if you were making certain amounts of money, you knew that the government was going to take 15, 20, 30% of your business. Obviously, the more successful you are, the more they take. And then when you become uber rich, they take nothing, right? Isn't that the way that we always hear it? But for the most part, you want to give yourself a set number. Your tax person can kind of give you an idea if that number should be 15%, 20%, 25%. Now, keep in mind, you probably have federal income tax, but you also probably have state income tax, and you have self-employment tax. So there's like 3 taxes that you are actually saving up for: the federal government, your state, and your self-employment tax. Now, for those of you that do not pay state tax, yeah, you can probably get rid of that. But for most of you, you're anywhere 3 to 6% that you're paying there. And I don't remember off the top of my head how much the self-employment tax is, 7, 8%, whatever it is. But so this stuff can really add up. So one of the best things that you can do for yourself is to start setting aside from the beginning, or if you haven't been doing this, start setting aside 20, 25% of everything that you take in and put it into an account. Now, here's my recommendation. Go open up an account at a different bank than the one that you have. Worst case scenario, you can stay at the same bank, but it needs to be its own account. Whatever it is, it needs to be out of sight, out of mind. Because I'm telling you, if you know you have an account that has $5,000, $6,000, $10,000 in it, you're going to think that's your money. It's not your money, okay? It's money that the government is going to take from you. You're just setting it aside so you don't spend it, all right? So rule number 1 is open up a separate account and put the money over there. Now, here's the cool thing. You can actually just go online now and start pre-giving it. You don't have to wait for the quarterlies to be able to do it. You can go make pre-tax payments to the IRS online, and you'll save those receipts, and it'll have a record of all of the money that you spent. Obviously, a tax professional is going to tell you to do it a different way, blah, blah, blah. See them. But for some people, they might say, hey, I'm just going to make a $5,000 deposit with them on every other month, or whatever the case would be. It depends upon how much you make. Some of you, it's not going to be anywhere near that, because I want you to keep in mind, it's also not off of the total sales. So earlier when I was saying the $30,000 is what they made, doesn't necessarily mean you're paying taxes on $30,000. Let's go back. Let's see how many of you can do this. What is the calculation we're always talking about? Let's do it. Sales minus cost of goods minus your expenses equals your profit, right? So if you had $30,000 in sales and your cost of goods were $10,000 and your expenses were $10,000, that left you with $10,000 in profit, right? 30 minus 10 for COGS, 10 for expenses, left you 10 for profit. So theoretically, you're paying taxes on that $10,000 for profit. Now, I can already hear some of you going, Tammy, that's not all. There's other deductions. Yeah, there's other things. For example, depreciation is going to play in your taxes and everything else. That's where you get a tax professional. But for majority of you, okay, that's not the case. If you have big equipment that you're having to depreciate every year, absolutely, you're going to be hit with depression. You'll have depression too, but depreciation. All right. I'm just trying to give you a basic number to have in your head. Okay. This isn't the end all number. You have to do your taxes, whether it's TurboTax, a tax specialist, whatever you're doing. But if you're just kind of doing the guesstimating, sales minus cost of goods minus expenses to your profits is going to give you a good base point. So you will know that, hey, I'm going to make about $10,000 in profit. Then you know that if you've got 25% that you need to set aside, that you need to put about $2,500 set aside for taxes, whatever that number may be for you. For some of you, it might be up to 30%. For some of you, it might be down to 10%. But at the end of the day, you need to set that money aside. That is the most important thing that you do. Listen, you don't want the IRS on your butt, okay? Because if you have to do bankruptcy, the IRS wants their money. I can't tell you, and I'll bet you every single one of you probably already know a small business owner who owes the IRS money. And some of them, it's crazy what they owe. All right? They owe $50,000, $60,000 to the IRS. That's crazy. And that's because they went several years without paying any taxes. And guess what? The IRS will find it. They will track you down and they will want their money. You could have closed the business and they still want their money because you made that money in the past. Do not get yourself into this problem. And I'm going to be real with you, okay? I screwed this up. I know better, and I screwed it up. Now, I had reason why I screwed it up. I meant to, but I didn't mean to, kind of a thing. When I became a small business owner, part of the challenge that I had is, the market crashed and everything tanked, and I was taking every single dollar that I made, and I was not only paying my expenses for my family expenses, but also for the business. So at the end of the day, every single dollar was going towards something. Well, guess what? When I got to the end of the year, the government still wanted their money. I still owed the money. So now all of a sudden I was playing catch up, right? So when you have to pay catch up and it's like, oh my God, I owe them $15,000. Where am I going to get $15,000? I don't have $15,000. Guess what? Then you go into a payment plan with the IRS, and then you've got a monthly payment, and you can only do a monthly payment once every year, and blah, blah, blah. And then all of a sudden now you've got double the problem, right? You never learned how to take the money and not spend it the first time. Now you've got to come up with this extra $500 a month, and now you're starting the whole cycle, because if you don't break that cycle, it's just going to continue to snowball. That's how people get into trouble. Okay. I'm proud to say I sit here and I only owe the government the taxes that I owe them for the current year. That's the way it should be. Now, am I perfect at paying it? No. Do I get it paid? Have I been great? Yes. But here's the thing. I do it at the last minute. Okay. I do set aside. I have an account that I put that money aside. So I know I have the money. It's just a matter of, paying them, because I still have to finish my taxes. Thank God I got pushed off. But I know that when I do it, I've got the money set aside to be able to pay those taxes. It's a huge difference. It's like life is different when you owe the government, because here's the thing. Even if you claim bankruptcy, your taxes can't go away. Okay. The IRS wants their money. The IRS is like one of the few people that can come after your house. They can come after everything that you own. They can take stuff. Okay. They are powerful as Chase is not going to come they might take your car, they might repossess, foreclose on your house, but they can't come wipe out your bank accounts. The IRS can do that, okay? The IRS can come take what's theirs. You don't want to screw up the IRS, okay? You want to make sure you pay your taxes, your federal, your state, and your employment tax. All of a sudden, I can't remember what the dang name is, but you know what I mean. Okay, self-employment tax. So it's important that you stay on top of this. Okay, so if you're at the beginning stages of your business, make sure this is a habit you start from day one. Matter of fact, in the membership course, I had made a note because one of the very first stages of any business is to have a strong foundation. I want to talk about taxes a little bit and starting off on the right foot, because there's some of you that are listening right now that know exactly the pain that I'm talking about, because you are currently in a payment plan with the IRS, you were in a payment plan with the IRS, or you're scared shitless that you're going to have a payment plan with the IRS or they're going to come take something of yours. There's a bunch of you listening that fall into those categories. Like I said, been there, done that, got that t-shirt. It sucks. It's important that every single one of you guys, from now going forward, that you pick a percentage that is based off of history, based off something your accountant tells you, something that you just know that you end up doing. It depends upon how much money you make, but you need to start setting aside that 25% and putting it away. And here's the cool thing. Let's just say you just automatically take 25% of every check you get and put it into this account. All right. Or every time you get paid at the end of the month, you just say, hey, this is everything that I made for the month. I'm going to put 25% of those profits off to the side for, you do your numbers for the month and you're like, hey, I made $10,000, 25% of that's going to be put aside. At the end of the year, when you pay the government what they owe, you have this account with some money in it. All right. Worst case, it's a forced savings plan. Leave the money in there. Let it grow. Okay. There's nothing wrong. Then guess what? When coronavirus pops up and it shuts your business down, guess what? You've got this account over here with extra money. You've got plenty for your taxes, but there's extra money because you just left it in there and you continue to let it grow. So it doesn't hurt anything by you letting that out of sight, out of mind in that account grow. The big thing you can't do though is say, hey, I've got this account with $10,000 in it. I know it's the government's, but hey, I need something. Okay. You can't use the tax account for other things just because you want to do it. Okay. The tax account is for the taxes. That's why it's got to be out of sight, out of mind. Otherwise you will spend it. So it needs to be someplace that you're not going to touch. You know what? I'd rather you open it up and go, holy cow, look at all this money that I've got. Pay the government what they have and then say, oh man, okay, now I can decide. Am I going to leave it all in this account or I'm going to halve it? I'm going to take half back out and leave half in there to grow for the next year. The other thing you cannot do is you can't say, oh, I don't need to pay my 25% this month because I got so much money sitting over there. I don't want you doing that either. I want you making very smart decisions when it comes to your tax money. All right. I don't want you to be one of those statistics where you are a business that has to close because you screwed up your taxes. And I'm telling you, talk to people. Those people are out there. There's people that you look at and you admire and you love them. And if you really start talking to them, you're going to find out they had a problem at one point in time with their taxes as a self-employed individual. I think it's a rite of passage. I think we all have to screw that up in the beginning to really understand that, because we are, especially if you were in corporate America or you worked for someone for years and years and years and someone else always took care of the taxes for you, you're going to screw that up. You're not used to it. It's a new habit that you have to create for yourself. But it's a dangerous habit because it can get very expensive, and it's one that can cost you more than just money. And if you've already found yourself, let me throw this plug out there too. if you've already found yourself in all kinds of doo-doo because of screwing up your taxes, I want you to get over to a tax specialist right away. There are certain tax people, and I don't mean your average everyday, I work part-time and do taxes. I'm not talking about that person. Usually it's going to be the person who is in charge of the tax company or a tax accountant, somebody who deals with taxes on a regular basis that has been trained on how to do mitigation when it comes to that. There are people that sometimes they'll get themselves into $20,000, $30,000, $40,000 worth of back taxes. And guess what? They can negotiate for you with the government and get that dropped down big time. They can get you, you might owe $30,000 and then get you out for $1,000. I wish I would have known this back in the day. So if you are someone listening right now that is in serious doo-doo with how much money you owe the government, I want you to get with a tax mitigation specialist, somebody that really knows their stuff. Talk to somebody who can tell you what kind of cases they've done, and they can probably get you to settle pennies on the dollar with that. Now, it doesn't give you permission to screw up in the future. You kind of have to be really good, and they watch you. You have to be good for so long, because they can always go back and get the rest of the money. So there's all kinds of stuff. But if you are finding yourself overwhelmed and just like, I don't know what to do, I'm so far in debt, go talk to one of these people. There's somebody that's in your town, in your neighborhood, in your immediate area that you can go see that specializes in this, and they really find joy in getting the government to settle for pennies on the dollar. I know that for example, in my little town, we have an awesome guy, Richard, who can do this and does a fantastic job with it. So each of you guys have somebody in your particular communities. Go track them down if you're already in trouble. But for the majority of you, we're never going to get there. Okay, let's go back to what the whole thing is. I want you to start setting aside the money for the taxes. I know I'm rattling. It's very important. I can't tell you how important it is that you set aside the money for the taxes, and you just do it on a regular basis, just like on a paycheck where it was pulled aside automatically. I want you just to it's just a thing you do, is either when you get paid and or at the end of the month when you do your sales minus cost of goods minus expenses, here's my profit. From my profit, I automatically put that 25% away. Okay. I want you to make sure that you're doing that. All right. So that would be like, for example, you can even do math if you wanted to. If you know that you make 20% profit for the most part on every dollar, you can do it on big chunks of sales too. Because if your profit is 20%, let's just say you do $1, okay, or let's say $100. Let's say you make $100. 20% of that is going to be profit. So of your $100, $20 is going to be your profit. Then from that, 25% of that $20 needs to be set aside. So to put $5 into your taxes. Make sense? So you can take from the big number to the profit percentage down to the next 25% that you're going to take out for your taxes. So you can do the math and do it that way as well. All right, I'm rattling, and now I know I'm getting too long-winded on this. I think you got my point. Please do not be a statistic. Do not get yourself into so much trouble on your taxes. Pay your taxes, but pull it out right away. Set it aside. Put it in an account off to the side so that you have it. All right. With that, I'm going to get out of here. And if you want to learn more about your business numbers, don't forget, we do have a course out there called Know Your Business Numbers. You can go to knowyourbusinessnumberscourse.com, where we dive into your business numbers so you can understand your P&L better and everything else. And when I get this membership, this learning center is actually what's going to be. I plan to have even more of this kind of stuff in there to help you out. And so if you have interest in that, the learning center membership there's in the show notes. Right now I'm just letting people know it's coming. We're going to have stages of walking you through. I'm really excited because I've been really working on this, stages of really stepping back in time to having this strong foundation and working your way up through customers and through knowing your business numbers and through identifying your processes and your people and everything so that you can make $100,000 in profit so that you can take that home. Because I want you all to earn 6 figures out there, and that's what I'm here to do for you. All right, with that, I am out of here. I know I've said it a few times, but this time I really, really mean it. Bye for now. Okay, badass business owner, don't you think it is time that you learn how to read your profit and loss income statement? Now, I know you don't have time. I know you hate numbers. I know you're afraid of what you're going to find. But it is time to suck it up, buttercup, and learn to read and understand the most important report in your business. Your profit and loss income statement shows you the flow of money in and out of your business. Don't you think it's time that you started to pay attention? Now get your free, quick guide on how to read your profit and loss income statement at profitandlossguide.com, or just click the show notes. There's a link in there for you. What are you waiting for? You're a badass business owner, aren't you?